20, 40, 60, 80, 90, 100. 100 ounces of silver. 1. The gold to silver ratio is 100 ounces of silver to 1 ounce of gold. What's up, everyone? Welcome to another amazing episode of Campbell's Coins. I've got a really cool one for you today. So the markets, they've been a little bit crazy this week. Today is 3/11 and the stock market's dropped probably around 25 to 30% in just the last week. It's nuts. And this drop in the market has done wonders to the gold to silver price ratio. Now, I've already done a video on the gold to silver ratio, and you can find that one here. However, I wanted to revisit this topic since the gold to silver price ratio has reached 100 to 1. That's right, 100 ounces of silver to 1 ounce of gold. In this video, we are going to dive a little bit deeper into this topic, and I'm going to show you how the gold to silver price ratio can actually benefit you. Stick around until the end because I will give you my exit strategy for when the ratio drops. Coming up. The information in this episode has been carefully compiled from sources believed to be reliable, but the accuracy of the information is not guaranteed. I am not a licensed financial analyst. I'm a precious metal strategist. This episode is not intended as investment advice. The opinions expressed are mine. I cannot guarantee any silver or gold products you purchase will rise in value. You should be aware that prices will fluctuate and may go down as well as up. Strategies mentioned in this episode may not be suitable for you. Past performance is not an indication of future profits. The decision as to how much to allocate is strictly up to you and/or your financial advisor. As I mentioned, I've previously done an extensive introduction to this topic. For those looking for more information on the topic, check out that video here. This video is specific to how the gold to silver ratio can benefit you. However, here is a brief overview of what the gold to silver ratio is. In front of you, I have 100 ounces of silver and 1 ounce PAMP gold bar. The gold to silver ratio is simply a measurement of how much silver it takes to buy 1 ounce of gold. It fluctuates on a daily basis due to gold and silver prices. The current gold to silver price ratio is 100 to 1. It's actually a little over 100 to 1. It's like 100.33 to 1. However, there is another gold to silver ratio, and that is the ratio of gold to silver in the earth. That happens to be 9 to 1. What this means is, for every 9 ounces of silver mined out of the earth's crust, 1 ounce of gold is mined. There is no reason the gold to silver price ratio shouldn't be the same ratio it naturally occurs in the earth, 9 to 1, especially since silver has higher industrial demand and more uses than gold. And yes, my entire thesis for how the gold to silver ratio can benefit you is entirely dependent on the gold to silver ratio dropping. Some people actually think it will not drop, but I can tell you this. In the history of humanity, keeping track of the gold to silver ratio, it has never not gone down. Just 9 years ago, during the 2008 economic crisis, we saw the gold to silver price ratio dip into the low 30s. And the gold to silver price ratio has fluctuated greatly in just the last 100 years, from 15 to 1 to today's historic high of 100 to 1, and frankly everywhere in between. This fluctuation allows one to get more gold than they can normally get for the price of silver, and vice versa. Let me explain. I'm going to use this pile of 100 ounces of silver and this 1 ounce gold bar to illustrate my points. Just a few hours ago, the gold to silver ratio hit 100 to 1. And I have to throw in a tiny caveat here. The gold to silver ratio is dependent entirely on spot price. So you can't just say, oh, I'll trade in 100 ounces of generic silver and get a Pampa bar. That's not how it works. It's the spot price of silver to the spot price of gold. So if you're able to pick up a 1 ounce PAMP gold bar for spot, then yeah, technically it would work. But it is just dependent on spot pricing, and just for argument's sake and not getting into the nitty gritty of everything, let's just assume everything is at spot. So as I was saying, the gold to silver ratio is currently 100 to 1. And what that means is one could buy 100 ounces of silver, and the price it paid for this could get 1 ounce of gold. When this ratio drops, and historically it always drops, especially in times of economic uncertainty, let's say to the gold to silver price ratio average of 47 to 1, it allows an individual to get 1 ounce of gold for the price of 47 ounces of silver. So let's, for argument's sake, say I bought, the gold to silver price ratio was 47 to 1, and I bought 1 ounce of gold at that time. This 1 ounce of gold I could trade in and get 47 ounces of silver. Alright, now let's play the game that today it goes up to 100 to 1, which it actually is at. You could trade in this 1 ounce of gold, but you won't get this 47 ounces of silver. You'll get an extra 53 ounces of silver on top of that. So the price that you paid for this 1 ounce gold bar, you more than doubled the amount of silver you could get just because of the price ratio. You didn't have to do anything different. You didn't have to pay any extra money. Just because you bought this at whatever price you bought it at, the price gold to silver ratio increased and allows you to buy more silver. And the inverse is true. Using this 100 to 1 ratio, let's say I put all of my money and I just bought silver. 100 ounces of silver. Let's say I paid spot price for it too, which is, probably didn't happen, but let's just say I did. And let's say spot price is $1,550 for all 100 ounces. If I wanted to trade in all this silver at the ratio of 100 to 1, I could only get 1 ounce of gold. But let's say I held on to my silver, and let's say the gold to silver price ratio drops to 20 to 1. I could trade in this 100 ounce pile of silver for 5 ounces of gold. And if you recall, I only paid $1,550 for this 100 ounce pile of silver. But when the ratio drops to 20 to 1, I'm able to get 5 ounces of gold. I didn't pay any more. I didn't do anything differently. I just waited until the ratio dropped. This is the power of the gold to silver price ratio. So why am I so confident that the gold to silver price ratio will drop? Well, I'm using history. I'm a history major. I've done lots of research, and I'm using history on my side. Silver is currently at 100 to 1. I mean, you probably have heard me say that in this video just probably 500 times. But that is so much higher than the 220-year average of 47 to 1. It is more than double that average. And if you were just to think of if it dropped to just its average, the price that you paid for this 100 ounces, you could get 2 ounces of gold. And yes, I know these are $20 Liberty Double Eagles, and they don't contain 1 ounce of gold, but I'm just using them for display purposes. And this is where and why the gold to silver price ratio matters to you. Investing and wealth preservation. A lot of very smart financial analysts feel gold is highly undervalued And the true worth of gold is $50,000 an ounce. That's awesome. But $50,000 per ounce is only 32 times above its current value. If we use the gold to silver price ratio on $50,000 gold, with just the average gold to silver price ratio of 47:1, that would give us $1,063 per ounce for silver. That is over 68 times silver's current value. And that is just with the average. If the price ratio drops to where it should be, its natural occurrence in the ground, well, that silver price gets a lot higher. You can play around with prices and different gold to silver ratios. You can play around with prices and different gold to silver ratios to get other values. If we went to a 9-to-1 ratio with just today's gold price of $1,563, that would give us $173 per ounce silver. I'm going to say this in terms of how I would do it. I would like to buy more gold. In order to do that, I'm going to buy more silver now, while this gold to silver price ratio is high. I am able to buy more gold in the future than I can today when this price ratio drops. When the ratio is high, silver becomes more favorable because relative to the ratio, silver is somewhat inexpensive. Watching the gold to silver ratio is a good strategy to follow when trying to accumulate either gold or silver. Now, what is my exit strategy for gold and silver? Why am I stacking? Well, that question has a very expansive answer, and I won't get into it in this video. But suffice to say, I'm never going to get rid of all of my gold and silver. But I will trade a lot of my silver for gold when this ratio drops. And I will trade some of that gold for other tangible assets like land or businesses and let those assets make money for me. I think I've taken enough of your time. I really appreciate all of you sticking around to the end watching my video. It means the world to me. Appreciate you all. Thank you. Thanks for watching Campbell's Coins, and that is my 2 cents.